So India has been developing leaps and bounds, and once upon a time, having dinner at a restaurant was considered as the biggest luxury. But today, every household steps out every weekend to indulge in special cuisines. Not just that, almost every third person has iPhone in their hand. With the rising purchasing power in India, is there a case building to invest in consumption-related funds to assess India's growth story in today's time? And for this on the show, we have invited Tata India Consumer Direct Growth Funds Manager Sonam Udasi, Senior Fund Manager. Sonam, good evening and welcome to the show. Obviously, we'll be talking a lot about the consumption story and the trend that's going on. But then, first up, question to you would be about the supply chain disruption. Do you think that's of a concern for you, looking at the kind of the setback that we've had in past few months, and disruption to a certain extent still continues. How much of a concern is that for you at the moment?
So, frankly, for domestic consumption, India consumption, supply chain is really not an issue because a lot of the raw material is available in India, and you're not dependent on anybody from outside. That being said, initially when commodity costs were through the roof, companies were facing margin pressures. You mentioned QSR, you mentioned some of the other chains, whether discretionary, they were facing input cost pressures. That has come down dramatically. And I suspect over the next few quarters, not this quarter, but from say December quarter onwards, margins for most consumer companies will start looking up because input cost pressures have eased.
All right, but then going forward and talking about the cost that's been passed on to the consumers, you think that's been happening, that has happened, and that's going to increase further going on?
So that keeps happening. It really depends. Some companies do it outright. Some companies look at what's the market share and they take a call. See, that's the beauty of India consumption. In the end, uh, there are market leaders who can take some sort of a cut initially and then pass it on gradually. Um, if you see, for example, paint companies, they've passed it on completely. There are companies on the pipe side who are still doing it. So it's a mix and match. But that being said, because the consumption basket is so large, the population, the customer profile is so large, companies can hold on and then move forward. It's a very, very steady progress of market share dynamics, competition, and how you manage your distribution. So it's a very, very and these companies operate on very, very good return profiles. So I think that helps them tremendously in taking this pain with ease. If you see the last 5 years, you have faced demand, GST, COVID, everything, and then from there you have come out stronger and shining.
But then tell me one thing, or help us understand which sector under this consumption umbrella is likely to do very well and likely to do on an average, looking at the kind of global scenario.
So I think it really depends. If you take a 3 to 5 year horizon, I suspect all segments of consumption in India will continue to do well. So there may be a quarter or a year where only QSRs do materially well versus say building products. And then there may another year where discretionary does better than something else. The point, actually, the most underlying important point is that you were $1,050 per capita income in 2008. You touched $2,000 plus per capita income after 11 years. You are at $2,200. In the next 5 years, 5 to say 7 years, India will be a $4,000 per capita income country. It's the basic rule of compounding. And as the per capita improves, there'll be different kinds of consumption. So at the lower end, people can aspire more. There can be upgrading possible. And on the higher end, the lifestyle consumption. Look at Tanish's numbers or Titan's numbers, which they just reported. So that also picks up dramatically. So if you take a 3 to 5 year horizon, all segments should do really, really well. Penetration levels are, hardly anything. It's affordability that sometimes is the key issue.
How concerned is rural consumption and demand for you, considering a timeline of, say, maybe 2 quarters?
I believe you mentioned rural.
Rural, right, right, right.
So I think again it's pockets. If you see demand for tractors, that has been tremendous. It has been better than expectation. If you see demand for credit, that has picked up dramatically. However, if you see demand for say two-wheelers, that has not been up to mark. So it's very, very mixed signals. But I do believe that even within rural India, because they have had the massive brunt of first wave and second wave, a lot of people are sort of sitting on the sidelines, trying to get their cash flow in, getting savings right, and then moving forward. So I think we'll see more trends. As I said, as per capita income improves, rural incomes are up. Rains have been good this year. I think that should help it materially in over the next 2 quarters.
Now let's talk about the demand and consumption pattern that we are witnessing. How long will it sustain? We have seen within the auto sector, the passenger vehicles have gone more than 25%. The gold demand is at a very good level right now. Housing sales are at a 10-year high. Looking at the interest rate scenario, which is likely to be there for a few more quarters, any slowdown in these segments that you are witnessing, or maybe post festive season, we might just see a decline?
So that typically happens. See, there is also a level of pent up consumption as well that is happening currently, both on housing and autos. That being said, if you see the last 10-year, 20-year data, and we have been, facing these high interest rates or, trending higher and then trending lower for quite some time now. And I think the Indian consumer is sort of understanding of this situation. The major point, more than the interest rates, is really what is your spending power and how is your employability. If you look at the EPFO data or you look at the unemployment data, that is quite encouraging, and I think that gives us confidence that there is more to this than just interest rates.
That's an interesting take, that you've just mentioned, that there's more than raising interest rate. But then, how strong are we domestically in terms of demand and consumption? You've explained this earlier also in your answers. But then, the pressure, the global pressure, don't you think is just too high for us to sustain on our own grounds?
So, if you remember, I'll take you back to 2008. In 2008, similar situation, globe was exploding. Indians were doing okay. There were pockets of euphoria. Again, on the ground, and I'm talking about today. If you talk to, we have done a lot of channel checks across various categories. There might be some shades of less enthusiasm among the companies on the festival, etc. There is no fear of extreme slowdown on the ground. uh, on the domestic consumption side, there might be slowdown on the export side. That's possible, but on the domestic consumption side, whether you talk discretionary, you talk building products, uh, you talk autos, so far nothing very material.
Okay, let's talk about an investment portfolio of an investor. What, according to you, or how, according to you, should one place a consumption fund in their portfolio? What's the kind of positioning one should have for this kind of a fund?
So I think, see, thematic funds are for the evolved investors. So consumption is a theme, and if you understand the theme, then you should go for it. It's a very, very secular theme in India. India is a consumption-driven nation. Our per capita income is quite low. We are at $2,200. China is at $10,000. And as we move up the per capita, income stream, the level of consumption, the types of consumptions that people will do will keep changing. Currently, if you see in metros, earlier the trend was if you have had an X car, that'll do. Now people, you look at Merck data or Audi data in some of the metro or even the state capitals of India. There are 29 states, 29 state capitals. If you look at the kind of demand that is being generated even today.
Perfect. So that was all about the consumption fund and this particular theme. If at all investors are interested and maybe want to place in their portfolio for time horizon of like 3 to 5 years. Thank you so much, Sonam, for being on board and explaining our viewers the importance of this kind of a theme going forward.